From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming June 29th Forex session. Pair in front of you is one that I haven't really mentioned before. It's the CAD yen, Canadian dollar versus Japanese yen. The reason I like this pair so much, quite frankly, is the fact that it is so highly sensitive to the oil markets. Essentially, you have two countries here, one that supplies oil and one that imports 100% of its oil. So while many people know the dollar CAD situation with oil, it's actually the CAD yen that's even more sensitive because, after all, the United States does produce a significant portion of its own oil, despite what you may have heard. Japan, on the other hand, produces none, so this is a much more interesting pair sometimes. And with oil falling back down to about the 78 level in the West Texas Intermediate, that is, it does suggest that oil prices are going to get weaker, and as such, you would expect the Canadian dollar to get weaker. Adding to that, the fact that the Japanese currency has been gaining anyways, and we have a perfect storm. Now, having said that, we do have a little bit of a support area that we are currently kind of dancing around, the 76, say 50 area or so, and that is why I find the close, or the lows, I should say, of the Thursday session so interesting. If we can break down below that, this pair should fall significantly down to about the 74.50 level. That would be where I would anticipate this pair falling. At that point in time, of course, we would probably see some type of fairly strong support, and I don't see much between here. You can see that we blasted straight down and straight up. Yes, I can see the consolidation back here, but typically when you get a move like this means that there's hot money in both directions, which means it'll bail once money starts coming back at it. So we could have a fairly significant move here. This would almost undoubtedly coincide with a drop in oil. So watch the West Texas Intermediate, the WTI or the CL contract, depending on where you're reading it from, and see if we can get down below the 78 level during the Friday session. If we do, then more than likely this will be an interesting pair to short. If we do bounce from here, and we have been consolidating, it certainly is possible. 78.50 looks like the top to me right now, and quite frankly, I'm not buying it. I'm looking to sell as we get closer to that level. I just like going with the trend, and especially when I see what's going on in the oil markets. So I'm either selling on a breakdown here or on a bounce and resistance here. Above that area, above the 78.50 area, it's at that point in time that I could be convinced to start buying, because that would be a significant momentum change. But currently, there just doesn't look like there's enough demand out there for oil, and unless you think the world's economy is going to suddenly change, we are getting bad numbers out of China, remember. And it should be noted as a side note, this isn't in the writing, but and this is a side note, Nike, as I record this, just announced their quarterly earnings, and in fact came in rather weak, and they mentioned China specifically. So that's another sign that China's slowing down. Nike's a pretty iconic brand over there, and as such, it'll be interesting to see how that plays out. As China slows down, so does demand for everything. So this really could have the making of a nice 2 or 3 handle move if we get that little budge during the session.